Good afternoon and welcome to our first quarterly webinar of 2025, when I'll be looking at price movements in motor and home insurance over the past 3 months and going back a bit further to see how that trend has behaved, and also looking forward as to what we might expect in the next quarter. As always, if you have any questions, then please do feel free to leave them in the chat, and I'll attempt to answer as many as I can if we have time at the end. Firstly, a bit about Pearson Ham. So we are pricing consultants. We work across multiple industries. Insurance is one of those. Whatever we do, our mission is to help our clients succeed through better pricing. So we're always focused on the end outcome. It's not about being the cleverest or overcomplicating things. It's about making sure that there is a genuine improvement in commercial performance from what we do. And that's true whether it's consulting projects or whether it's market price and competitor premium tracking. A short piece about the methodology. So we use panels of real consumers. So these are real people. So they've given up their permission for us to use their details. So this means it's a like-for-like basket of profiles. So it's really matching the same people over time. So we're able to track that. So it's price changes, not price movements that could be caused by changes in the mix. So these are genuine customers who buy insurance. So we do see a lot of speculative quotations run through price comparison sites, but these are genuine people, and you can tell from the average premiums. So if you, for example, the ABI average premium, which is paid, is around £612. This was in Q3 2024, and that compares with a confused quoted average premium of £861. So there is a difference there. Ours is closer to the ABI figure. We use 4 price comparison websites. So this gives us a comprehensive view across the market and takes account of those price differences that we do see across the different channels. So they could be based on differences in question set, in differences in mappings, there could be promotions, there could be price testing going on. So we take out the impact of those things by getting a comprehensive view across all 4. The data collection process attempts to replicate real consumer behavior as much as possible. We know that there are a lot of unusual pricing rules in place, which may be based on the time of day that things are run, the day of the week, the number of quotes that have been requested by any individual. So we take account of that and replicate customer behavior. We can't always exclude all unusual pricing rules. So we conduct data cleansing afterwards to make sure that the data is in line with expectations. We take out unusual movements, things outside of our threshold. We focus on the key metrics that are useful to pricing teams and provide daily reporting, which gives a view not just of how the market's moving, but also how individual competitors and individual products prices have moved on the previous day. We provide insights over a range of insurance products. So today we'll be focusing on motor and home, but we also do van, pet insurance, travel insurance, and landlord insurance is something that will be coming in the next month. So we have a broad range of services that we provide to our clients. So moving on to this quarter's price index. So we'll start with motor insurance and have a look at what have we seen over the past quarter, how have prices moved. So what we've observed is a movement of 3.6%, so a downward movement. So this follows the trend that we were seeing throughout the whole of last year. So premium deflation has continued into 2025. However, we're seeing the rate of premium decreases slowing down a bit. So we can see in January there was a drop of 2.5% to almost 2.5% on December. As we came into February, prices moved down by about 1%. As we moved into March, prices moved down by 0.5%. So we are seeing a slowdown in the rate of premium deflation that's being observed within the market. If we look back a little further, we can see over the past 6 months, the prices have dropped over the past 6 months by around 9%. So these are the most competitive quoted premiums for our consumer panel. So this is the average of the top 5 prices across the big 4 comparison sites. So we're seeing those competitive prices coming down by around 9% over the past 6 months. So the biggest reductions we can see here around January in Q4 of 2024. So as I say, we're seeing the rate of decrease slowing down a bit. Looking back over the past year, so over the past 12 months, we can see prices have now come down by 17.7%. So they're about 18% lower than they were 12 months ago. So to say, we're seeing significant price reductions throughout the whole of 2024, and that's continued into 2025, but the rate of decrease slowing down somewhat. If we take a slightly longer term view, we can see some of the premium inflation that was happening prior to the reductions in 2024. So prices now around 11% higher than they were 2 years ago. So we can see throughout 2023, there are some big increases there. There's a period of transition towards the end of 2023 as we move into 2024. And then from April, we're very much seeing prices coming down, competition within the market becoming more intense, and that again has continued, as I say, throughout the year from April. This is a slightly longer term view that I like to take. So going back to pre-COVID. So if we can remember that far back, looking to January 2020, what's been happening to motor insurance prices. So we can see the impact of COVID throughout 2020, 2021, with premiums reducing as obviously claims frequency drops off because of lockdown and reduced traffic on the roads. There's margin there for insurers to be able to pass on to consumers. And we can see that happening. That may have gone a bit too far in terms of prices dropping, but once we move into 2022, we've then got the impact of GIP. So the general insurance pricing practices changes, which aligned new business and renewal pricing. So obviously this meant an increase in new business pricing as renewal prices dropped, followed by a period of calibration as insurers got used to their new competitive environment and their position within it. We've then seen, as we move through 2022, increasing cost of claims, rising inflation, costs of parts increasing, labour shortages increasing the kind of time required for repairs, and that again impacting on the costs being incurred by insurers. So as I say, significant premium inflation during this period, reaching a peak in November 2023, where prices were around 46% higher than they were at the beginning of 2020. And since then, we've seen increasing competition in the market. So I think premium inflation reached a point where it was providing a bit more comfort to insurers in terms of expected profitability, which enabled increased competition last year, and that's continued into this year. How much further it can go, again, that waits to be seen. Taking a look at some of the segments, so we are seeing differences in the rate of premium deflation by segment. So this chart shows driver age, and we can see following some differences in premium increase around June 2024 and prices dropping since then. The price reductions have been greater for younger drivers. So we can see those over 70 and the 6170 is the light grey. You may not be able to see it on this chart so well, but it's close to the darker one above it. So we can see that the prices for the older drivers are around 13.4% down, whereas those under 26, under 30 really is about 16.7, 16.8% down. So we're seeing some of those bigger price reductions come through for younger drivers. And thinking about some of the drivers or enablers of the premium deflation would be things like the kind of whiplash reform, Minister of Justice portal. So this would be more impactful on some of those younger drivers. So it's not surprising to see that difference. And there are differences by provider, different insurers taking different approaches based on front versus back book strategies following JIP. So we will see that there are differences in premium reductions by segment. Looking at it by region, so we can see while prices have dropped across all regions, given the level of decrease, it's probably not surprising to see that. Then there are differences in the rate of decrease. So you can see the Northeast here, where prices have dropped by almost 20% over the past 12 months, compared with Northern Ireland, where prices have dropped by 13.4%. So there are variations by region, variations by driver segment, and also variations by channel. So we know that there are differences in prices being returned across different PCWs, and this could be the cause of there are different mixes, different types of customers are attracted to different types of website. Our methodology solves for that because we're using the same batch of people across the different channels, so mix is taken out of the equation. But we do see that there are differences not just in the level of premium, and it could be question sets, it could be mappings, there could be promotions, but the change in price as well, we're seeing differences. So prices are ranging between 16 and 18.6% movements depending on which PCW you're looking at. So this is a sample of some of the bigger insurers, so more or less the top 10 in terms of competitiveness. So what do they look like in terms of their price movement? So as I say, we've seen a slowing down in the rate of price reductions that we've been observing throughout last year, and are now starting to see some increases coming through. So we can see here that there are a couple of flat movements over the past 3 months, and one provider increasing by just over 3%. But I think it should be noted that actually there are still some significant reductions. So it's important to be able to see on a provider by provider basis what's happening, and to look at the different strategies, particularly if this is somebody who's within your competitive set. What they're doing is going to impact on your own trading performance. This shows a trended view. So these are the providers that have just featured in the previous slide, but their price movements trended over time. So we can see these are the top 5 in terms of prices dropping. So where prices have dropped the most, what does that look like? And there tended to be a bit of a plateauing towards the middle and the end of last year. And since then, there's been some sharp decreases coming through. So these are where we're seeing the biggest reductions in Q1. Where those reductions aren't quite as great, or we're seeing some increases, then actually some of that kind of premium deflation started earlier, and it's not quite as as smooth as the previous one. It's also interesting to see how some insurers and brokers are kind of adapting their footprints and quotability strategies in line with their pricing strategy. So we can see for this particular provider, and if you are one of our clients, if you're a subscriber to our data, then you'll be able to see who these insurers are. On the webinars, we keep things anonymous. So we can see that oil prices have dropped by around 11% since the start over the past 12 months. Quotability actually has increased, so we can see from 70.3% to 87.5%. So this is the percentage of quotes that are being returned on the potential. So where our panel of consumers represents 100%, 87.5% of them are getting prices from this particular insurer now. 70%, 12 months ago, we're getting prices from this particular insurer. So we can see that the kind of, although prices have dropped, with the increase in quotability, then it's going to work out net positive in terms of GWP, even without an increased conversion rate and sales through the price reductions. Obviously, they're within a very competitive environment where competitors are also reducing prices, so we wouldn't expect to see too much of an uplift in terms of volume from some of these reductions, but the combined strategy could work very well. Again, this is looking at individual insurers' strategies and how they are approaching the kind of current trading environment. So we can see again by driver age over the past month, what does this look like? So we've seen some increases at the beginning of the month for some of those older drivers, those increases being backed out and reversed towards the middle of the month for some of those age segments. So these are the oldest, the over 60s. So actually now we can see that the over 70s are 5% below where they were at the beginning of the month, whereas some of those other age groups are kind of in line with their previous positions. So again, it's interesting to have a look at some of those competitors to look at, well, what are they doing in terms of quotability, footprint, and targeted price changes, which informs their overall strategy and what is going to impact on your trading performance. So that's where we are with motor. So in summary, I would say prices have continued to drop, but the rate of reduction has slowed down, and we are seeing different strategies. So depending on who your competitors are, it's important to be able to see what those different approaches might be. Moving on to home. So again, we've seen a similar level of decrease over the past quarter. So 3.3% drop on Q4 2024. Actually, the trend is slightly different. So the overall figure is very similar, but we're seeing the rate of reduction increasing. So it's been fairly consistent over the past 3 months. So we've seen about a 1% drop each month, slightly more over the past couple of months. So again, what we've seen is kind of prices dropping in home insurance. If we look back over the past 6 months, then we can see prices have come down by almost 5% during that time, and most of that happening in the last 4 months. So Q1 being the biggest period of price reduction. So this is over the past 12 months what we're seeing, and prices for combined. This is for combined cover, and it's on the same basis as the kind of motor figures. So we're looking at the most competitive quoted prices, the average of the top 5 across the big 4 comparison sites. So what we're seeing is an overall reduction of around 1.7% over the year. So this is the first time that we've seen annual price deflation within the home insurance market for some time. And as we can see, it's a picture of 2 halves. So price increases at the beginning of the period, price reductions towards the end. Again, looking at this over a slightly longer period, we can see that significant premium inflation that was happening throughout 2023 and into 2024. So this has continued for longer than a similar picture that we saw in motor. So the kind of the rate of reduction has happened later as well. So that the price reductions that we're seeing within the home market are a few months behind what we observed in motor. So where we are currently, although prices are down 1.7% year on year, they're still around 38% higher than they were 2 years ago. So again, the rate of premium inflation has been significant, and it'll take something to kind of work that through as we move through the next few months of the year. Again, looking at some of the larger providers, what do their price movements look like? So again, we can see there's quite a range here. So we're seeing some where they're relatively flat or price increases have continued, and others where there are some fairly substantial price reductions within the quarter. So ranging from 12.8% here to 1.1% increase. So there have been some significant movements within the market, and again, these are varying by individual insurers and brokers, so it's important to be able to see who's doing what to formulate the most appropriate response. And again, looking at that trended view over time, so this is where we're seeing the biggest price reductions in the quarter. What does that look like over time? And they've been kind of fairly flat mostly, and then those reductions we can see coming in the last 3 months. We're seeing a slightly different picture where the prices are kind of increasing not increasing, but they have increased over the past year, but reduced less over the past quarter. So that's where we've seen larger increases earlier on in the year, and some of those continuing, others dropping down a bit. So again, on contents only, we see a similar picture. The price reductions aren't quite as steep as on combined cover, but we're seeing 1.6% drop throughout the quarter. The biggest reductions again in the past couple of months. So following a similar trend to what we've seen on combined cover. Looking back over the past 6 months, so prices for contents only have dropped by 3.8%. So again, we're seeing price reductions every month since December. So over the past 6 months, it's every month apart from November 2024. And again, looking back over the past year, so prices are now for contents only around 4% lower than they were this time last year. Taking the longer term view again, so over the past 2 years, prices for contents only are around 12% higher than they were 24 months ago. So it's a similar picture that we're seeing across motor, combined cover and contents only, where prices are dropping, year-on-year prices are down. But if you go back slightly further, then we can see that prices are still higher than they were 2 years ago, and on motor particularly, even more higher than they were at the beginning of 2020, pre-COVID, with everything that's been going on since then. Again, looking at this at an individual provider level, there is quite a range of price movements here. So we can see ranging from minus 11.4% to plus 11.5% in the quarter. So we see a bigger range of prices. There's less consistency with the insurer and broker price movements, which makes it even more important to be able to see who's been doing what. And we do see this as we move through these periods of transition. So where the market's been hardening and it switches to a softening market, then it does take time for some insurers and some brokers to kind of catch up with the rest of the market and react to be able to kind of adjust their prices. So we do see this every time there is a shift between kind of markets hardening and softening. So this isn't unusual to observe at this stage within the market cycle. Again, this trended over time. We can see where the biggest quarterly reductions have been seen. Prices kind of typically lower than they were last year. So the grey line shows the year-on-year price change, so up to 10% down on the year. And where we are looking at some of those smaller reductions or price increases, we can see there are still some providers where prices are higher than they were 12 months ago. So up to 8% higher in terms of year-on-year price movement. As I say, this is a transitional period that we're going through. We're moving from a hardening to a softening market, and it's not unusual to see these types of movements and these differences between different providers and the approaches that they're taking. So looking ahead, what do we expect to see within the motor and home insurance markets? So what's coming up in the next quarter? So in terms of Q2, what would I expect to see? And this is my own personal opinion, so based on experience and looking at these things for some time. I think we probably will see slightly more price reduction within motor, but that's starting to turn. So as we're kind of looking at Q1, we can see that the rate of price reduction has slowed down, and we're now into a period where prices have been dropping for over a year. Year-on-year prices are down. They did start from a high position, so there was significant premium inflation prior to this. So I think insurers became confident in terms of the inflation being able to cover the cost of claims, which had increased significantly. Whether that's still the case remains to be seen, because those claims pressures remain, so those cost pressures are still there. So I think there's probably prices can't drop much further on motor. I would expect that to kind of plateau as we move through Q2 and potentially see some price increases coming through. So I think we're probably in that transitional phase moving the other way on motor. We've seen the market softening. It's got to start to kind of level out in Q2, I would expect. On home, so I think a slightly different picture on home. Home price deflation started later than motor. I think the premium inflation that preceded the price cuts was steeper. So we are now looking at a position where prices are still 38% higher than they were 2 years ago. So I expect there's probably still some headroom there for insurers to drop prices. There are growth strategies. The market is competitive. So I would expect as we move through Q2, I wouldn't be surprised to see some continued premium deflation and prices continuing to drop as we move into the next quarter. So probably kind of leveling off in motor and still some room for continued price reductions within home. So Q&A, so we've got 1 minute left for any questions, so let me just have a look. So what impact has the January Ogden rate change had on motor premiums? So yeah, again, as I said, we've seen differences in the level of reduction being applied by driver age. So younger drivers getting a bigger discount or a bigger price reduction than the older ones, which could be linked to this. When we've seen these Ogden changes before, it's not necessarily absolutely clear how that is impacting on premiums. So what you expect to see doesn't always translate into the final prices that are being presented. But I think that overall trend by driver age gives a good indication of what might be happening. Okay, so if you have any other questions, please feel free to contact me directly on stephenkennedy@pearsonhamgroup.com. I'll be happy to answer any that you may have. Apart from that, I look forward to the next quarterly webinar when we can see what's been happening in Q2 and whether my expectations were correct or not. Thanks very much, and see you again.